Start. Okay, hello everyone, and thank you all for joining us today in another town hall meeting that is coming to you from as compliments of hands-on diagnostics. Last week we had with us both representatives of the APDA that discussed with us the moving forward of the various rules and regulations and what the APDA will be doing and handling for the profession in the next few months. And then in the second part of last week's presentation, Bob Kowalik discussed with us the application of forgiveness of for the PPP loan. Now, after that presentation, we got a ton of emails of people with questions, asking for clarifications and this and that. So I went back with Costas and we reviewed the application again for forgiveness. And I have to tell you, I can understand, we can understand why you guys have so many questions. There are issues of complexity, perhaps they need more clarification. And at the end of the day, how you will fill out that application, it will determine whether these funds will be forgiven or not forgiven. And the different calculators, and we have put a few calculators out there, those calculators or estimators that we posted on savephysicaltherapy.com resources, those calculators depend on what information you will enter in there. If you enter inaccurate information and garbage, then the numbers you are going to get will not be appropriate. If you have payroll, and that payroll is, I don't know, $10,000, and that includes the federal taxes, and you include that amount in its entirety, then perhaps the numbers at the end of the day are not going to be correct in terms of your forgiveness, in terms of your forgiveness amount. So that's why I asked Bob to come back today and to share with Costas, myself, and all of us a further, more detailed version of the PPP forgiveness application process and tips and things that we have to be careful about and look at when we fill out this application. We're making a recording of this. We'll share also the recording. So when you guys introduce Bob, because he has been very frequently in these town hall meetings. But the only thing that I would like to express to him on behalf of Costas and myself and our hands-on organization, that Bob, thank you very much for everything that you have done during this period to enlighten people on how to get more money, save money, the things that they have to do and look at to manage to maintain their businesses during this very difficult time. Because we talked about that last week also. Yes, the money came in, you have it in the bank, you pay the payroll. But unless you have a plan at the end of the day to be able to maintain your business and have appropriate production, that is going to be a problem at some point along the way. So anyway, Costas, unless there is something from you, we're going to turn it over to Bob so he can start.
No, nothing from me. Bob, please go ahead.
Okay, Bob, thumbs up.
Okay, so I want to make sure I can share screen. Are you seeing this?
Not yet.
Not yet, not yet.
Not yet. Okay, give me a second. Oh, I think I have to.
You should be able to because you are.
Yeah. Yeah, I can. I have to push one extra button.
Okay.
We have this now?
Yes.
Okay, great. So first of all, it's my pleasure to help. I'm grateful to be able to help. It's my profession. It's been great for me for many, many years. And my wife's a physical therapist. My son just passed his boards. He's now a DPT. Newly, he hasn't actually received his license yet. But anyway, this is.
Congratulations.
Yeah, you're welcome. He's. Thank you for that. I mean, it's just so important that as many private practices get through this craziness, as possible. I'm just trying to help any way that I can. We do help with things that directly impact revenue, but this understanding PPP, participating with it, I believe it is an important program that the government came out with. I do believe it makes sense to participate with it. At this stage of the game, I'm assuming most have already obtained a PPP loan, though there's still $125 billion available, related to 3.5, round two. So if you haven't yet and cash flow's tight and you're concerned about what's happening going forward, I just highly recommend that you still get with your bank and give it a try. You'll probably have a much smoother and much more timely process than we all had. We were all part of the mad dash right at the very beginning, right? And we're right in the first wave of this, so it was a little bit of chaos then. So now that we're getting close to the forgiveness, period, it's the focus is now on how do you convert your loan and what you've spent to free money, essentially. That's what forgiveness is about. And I just want to dwell on this, but please understand, I'm not a CPA, I'm not a lawyer. I'm a fellow physical therapist, business owner who has spent way too much time trying to understand this whole thing and, understand that what I'm providing or presenting to you is my understanding of these things. So let's go through this. I have no idea what those lines are and why they're appearing. The SBA released the 11-page loan forgiveness application on May 15th. The first wave of loan recipients will be, into their forgiveness periods starting the second week of June. So this is, it's going to be impacting many, many businesses very soon. The application that was released did provide for some clarity on things that were confused before and introduced a whole bunch of new things. So I'm going to review that. This is still not 100% clear, but it's closer. And as I said, there's 125 billion that's still on the table for people to have. So I'm going to start with what's new. And the, I'm just going to run through these bullets here about, what's new in the whole program that became known with the application. So there's a new thing called an alternative payroll covered period, and I'll explain that. But it's a 56-day period from the first new pay period day that that occurred is after your disbursement date. So the day your funds showed up in your bank account is day one of your normal covered period. You have 56 days from there. You have the option of electing for certain costs and spend and forgiveness a completely different 56-day period, and that is this alternative payroll covered period, which starts the first day of the first pay period that followed the disbursement date based on how your pay periods run. So that's a major new twist into this, which has introduced some additional complexity. They have also looked at allowing the inclusion of costs that were incurred during that 56-day period, even though your payment for that might fall just outside of your 56-day period. So there's, as long as these payments happen on a regular schedule. And I think what they realized is that there was a whole lot of confusion around, and there was probably going to be a whole lot of manipulation of things to try to get actual debit dates and pay dates to fall within this 8-week period. And so they realized that normal schedules, you know, that payroll, pay dates and all this, and rent due dates might not perfectly align with these 56 days. So they created a way for you to get full credit for all of your expenses that were incurred during the relevant 56-day period. So that's one of the major things that changed. Utility expenses have been expanded to include transportation costs, phone, and internet costs, provided that those obligations existed prior to February 15th. There is an alternative simplified method for calculating FTE. Basically, if you're less than 40 hours, you can be counted as a 0.5. I'm not saying that's going to make sense, but it is an option. There are exemptions for FTE reductions that occur for various reasons. So if you terminated someone for cause, if there was voluntary resignation or voluntary FTE reduction, time work schedule reduction, there's now a mathematical way for you to not be negatively impacted due to those scenarios. I have no idea what these, I don't know if you guys are even seeing these blue lines. I have no idea what they are. Anyway, the FT, there's a new term, FTE reduction quotient. Essentially, that is your percentage calculation that's going to be applied to your spend. And if you have a FTE reduction quotient, that means your FTE-based forgiveness variable was less than 100%, meaning it's going to reduce forgiveness on your loan. But that's the term that they're using, FTE reduction quotient. They have introduced an entire new thing called the FTE reduction safe harbor, which is a whole different way of calculating FTE comparisons related to forgiveness. They have come out and indicated that they are going to look completely differently at loans less than or greater than $2 million. So if you're, and I would assume the vast majority of our industry received a loan under $2 million. And so they're not turning up the microscope as high. I'm not saying that you're going to get away with anything that you shouldn't get away with, but the level of scrutiny, the auditing, the requests for additional information, they're going to be looking at loan sizes greater than $2 million, completely different than they do under $2 million. Originally, anyone over $100,000 a year was not counted. The FTE related to those people was not counted. It is counted now. The application itself is entirely new, obviously. And there's also an introduction of another totally new FTE period, which is any 12-week period between May 1st and September 15th of 2019. So that's all that's new. Here's what's been clarified in addition to what's new. One FTE equals 40 hours per week or more. There's no such thing as more than one FTE. Somebody working 60 hours a week is not 1.5, they are 1. But you have to work 40 hours per week, or your employee works 40 hours a week to be considered one FTE. And I know a lot of us have policies with HR that say, well, 35 hours a week is considered an FTE because, or 30 hours a week is considered full-time kind of thing. That's because full-time status usually comes with benefits, whereas part-time doesn't. And so we have all of this stuff that we do around establishing what's considered to be full-time for other reasons. For the purposes of this, it's 40 hours a week. They clarified that there is a sequence to, or they clarified what the sequence to the math is regarding forgiveness. So you have your loan amount, you have your spend amount, you have your forgiveness reduction related to wage change, and that's wage change greater than 25%. And then FTE related, the FTE reduction quotient is applied after that. So there is a sequence to the math. They have, we already kind of mentioned this, but your allowable use costs are now aligned with what kind of period you're actually choosing. So you have period options and choices that determine costs. Any employee-related contribution, pre-tax or post-tax, to any allowable use spend related to health insurance and 401k is not an allowable use. There's a major clarification. Any kind of owner's compensation. So if you're K1 only, you're not W-2. You're not just sole proprietor or self-employed. If you're single member LLC, managing member LLC, K1, any kind of owner compensation is now clarified that it is allowable. It's part of allowable use spend. It is part of payroll costs. There is clarification around the date, the magic date of June 30th, and what did all that really mean, that it is now significant as it relates to FTE reduction. And they've clarified the significance around this mysterious time period of just February 15th to April 26th. So those are now relevant periods related to FTE reduction and forgiveness, which I will explain in further.
Bob,
Yeah.
One quick question on the previous slide, where you had that they have now included all different possibilities of employment or contribution, salaries or K1s or whatever those are.
Yeah.
The question is, now the people who will receive funds based on 1099, how will show that they paid salary, or how they will show that, or if they received funds as a distribution, let's say through a K1, how are they going to show that this is the money that they can forgive? Somebody who puts in the company that puts in W-2, they'll show the payroll record. But what someone who's an independent contractor or a K1 recipient through an LLC, let's say, will have to show?
Yeah, first of all, independent contractors are not allowable use still. So the 1099 is not in your allowable use spend or your payroll cost. But as an owner, if you're paying yourself just strictly on K1, so you could, whatever way that you transfer money to yourself. So if you have bank-to-bank transfer, you just have a record of that transaction. If you write yourself a check, if you do pay yourself through payroll, in my case, I just transfer money from a business account to a personal account. Well, that's a transaction that's trackable, and you can see and show that in your account statements. I would just suggest that you're clear that you're transferring amounts of money that that did not exceed. That you show a transaction level, $15,385 for the 56-day period or less, $1,923 a week during the 56-day period or less, so that you can show that, all right, this is how I compensated myself. If you're in W-2, then you're in your payroll records. but you can do it however you do it. You don't have to change how you do it. You just have to have a record of how you did it. So you just, I'll talk a little bit about documents and that kind of stuff at the end, but you are going to want to have all of these kinds of records, available. There's 6 parts to this application. There's the actual calculation form. There's a representations and warrants or certifications page. There's a thing called Schedule A. There's a Schedule A worksheet. There's an FTE safe harbor calculator. And then there's your required documentation explanation. So here's all the time periods that you're going to have to be aligning information with. Okay, so in the original, before this application, forgiveness application came out, on the left, the original column, these were always relevant time periods. You're going to need to have all of your data points, FTE, wage, all of your allowable use spend. Any allowable use spend item is going to have to be organized according to a relevant period. And I'll provide more clarification, but this is the list of periods that were always relevant, or dates. And the new dates, there is one more that I literally threw this together this morning and finished it about 5 minutes before 1 o'clock. So there is one more new period, which I mentioned, which is any 12-week period between May 1st and September 15th of 2019 is a new period. But along with that is your 56-day period if you elect to use this alternative payroll covered period. And the specific pay period, whether it's a 2-week period or bi-monthly, however you run your payroll, or every week, the pay period that includes the date, February 15th, is a relevant, important date now. So that's, adding to a lot of confusion. So certain costs, so again, allowable uses, will apply to different periods. So we've kind of broken down how that lines up. Your non-payroll allowable uses, things like mortgage, interest payment, rent, utilities, those only apply during your 56-day covered period, the original covered period. Day 1 is date of disbursement. The date your deposit ended up in your account is day 1, and you count 56 consecutive days. Those are the days that are relevant to your non-payroll related costs. Now, if you elect to use that same period for your payroll related costs, then it's all of your costs. But you have this alternative payroll covered period option now. So if you elect to use that period, then all of the right column costs have to be used and aligned with that period. So all your payroll costs, again, minus employee contributions on health insurance and 401k, but your health insurance costs, 401k costs, state and local payroll costs, owner's comp, all your FTE calculations, wage reduction calculations, and all your Schedule A worksheet stuff, and we'll get into a little bit more detail on that. But all of that is aligned with your alternative payroll covered period. So you have to choose between these two periods. And I promise I'll kind of wrap all this up in a way that makes sense, but I'm just pointing out the mechanics of what you have to do. So you've got multiple different time periods and different dates and different costs that are relevant within those time time periods and date ranges, and this is the craziness of this. But this is the work that you have to go through and do. And I think it's going to be important that, to the extent that these dates are already in the past, that you're putting this information together, and you're keeping records going forward literally on a daily basis, so that when the end of your 56-day period comes, whichever one you choose to use, you're done at that point, and then you can move on with submitting your application. But there is some relevance to knowing where you stand during the process, because, and you'll understand that a little bit better when I explain the FTE forgiveness options. But these are how the actual allowable use cost align with the periods depending upon which way you choose to go. But if you choose to use this alternative payroll covered period, you have to use it throughout for all of those calculations. You can't go back and forth. And in no case does your non-payroll related allowable uses apply to an alternative payroll covered period. So there's, this is not a typo. You will have a process of filling out the application, but there's actually a process to go through, the way that I see this, prior to that application completion process. So I call it the pre-process process. So for every employee, you are going to need to record their FTE and wage by day for every one of these time periods. It might seem insane, but it is absolutely what you need to do to get through this correctly. So the first, you have two kind of sections of time, those that are immediately relevant to the actual covered periods, you know, right around the loan dates and all that, and then your historical comparison periods, which are the last two at the end. So these are all of those time periods that you have to know every single employee's FTE, you know, hours worked, pay, you know, for during each one of these time periods. I've built an Excel workbook that separates out all the time periods, and we're kind of working through the structure on that. Once we're done with it and it actually flows and works, I'll make that available to everybody. My disbursement date was April 16th. The first possible disbursement date was probably not within, was probably 2 or 3 days before that. Technically, the first possible date was April 10th, but I don't believe there's anybody that got money on April 10th. You know, my 56-day period could be ending as soon as, you know, after next week. I'm going to be using the alternative payroll covered period, but once I have this structured all out and it worked for me, I'll make it available to everybody. All right, so now you also need to, I just want to clarify, for FTE calculation, you know, for all of these periods, a salaried person is 1 FTE. Anyone working 40 hours a week or more is 1 FTE. And then you're going to have to choose how you want to calculate part-time FTEs. Okay, so you have two options. You have your actual, you know, number of hours worked divided by 40, whatever fraction that is, or you can consider literally everyone who works between 1 and 39 hours a week as a 0.5. Now, you're sitting there going, well, which one makes more sense? And I can't tell you that. You are literally going to have to go through all those time period, all those calculations by every single person, and for every part-time person, do it both ways and see which one works out to your advantage. There is really no other way to do it. I don't know why the simplified FTE method was some great idea to throw in here, but somebody figured out for some reason, you know, that it helped people to do that. I don't know why. And I haven't worked through the math yet myself, but my intuition on it is that to the extent that you have a lot of part-time people between 20 and 40 hours a week, you're going to want to use method 1. To the extent that you have between 1 to 20, maybe the 0.5 is going to make sense. I really don't know how that's playing out yet, but to know for your specific circumstance, you're going to need to do the math both ways. There's a lot of work to be done. I know a lot of people are just saying, heck with them, and just hand it off to my CPA and let them do it, and pay them $300 an hour to do it. The next thing is that you have to do all of your non-wage payroll costs. You have to calculate that for both the covered, the 56-day covered period and your alternative payroll covered periods. That's your health insurance, 401k, and your employer, state, and local taxes. You need to calculate your owner's compensation in both of those time periods. Every person that's over $100,000 needs to be calculated separately from those that are under $100,000. And as I said, you're going to really want to try as best you can to keep this whole process going in real time during your 56-day periods. All right, so once you've done all of that pre-process process, the actual application process, once you've got everything organized, is really this. You work through the application from the bottom up. It's literally, you start at the end and work to page one. That's the way the workflow actually works. So there's something called the Schedule A worksheet, and that's where you list every employee. And there's two sections. There's a table 1, which is everyone under $100,000, and there's a table 2 for everyone over $100,000. For the under $100,000 group, you have 3 boxes: what you paid them, how many hours they worked, what their FTE was, and whether or not they were subject to any kind of wage reduction, and that specific calculation. For table 2, for those over $100,000, there's only 2 boxes. There's actually box 3 and box 4. I'm sorry, it's box 4 and box 5. Box 4 is the compensation, the actual wage, and box 5 is their FTE. They don't care anything about wage reduction over in someone in that group. So you're going to go through and do all this Schedule A worksheet. And again, the painful part of this is going to be that you need to do this Schedule A worksheet on, you know, that kind of math in multiple different time frames. Then you want to go through your FTE reduction safe harbor calculation. Then you complete Schedule A, and then you complete the actual calculation form. So what does safe harbor look like? The objective on the FTE, you know, is to not have an FTE reduction quotient. You don't want to have one. You just want to be able to fill in the line with a 1.0 or a 100%, meaning you're not getting a reduction. And so I've been reading through all of this many times in different ways. I've come up with, these are my rules. These are not listed in anything. I feel like I should work for SBA now. But rule number 1 is that if your FTE during the pay period that included February 15th is less than the FTE during the time period of between February 15th and April 26th, you will have a FTE reduction quotient, meaning you will not get 100% forgiveness related to FTE. The next rule is if your FTE on June 30th is less than the FTE during the pay period that February 15th falls in, then you will have a reduction in forgiveness. If your FTE during your covered period or the alternative payroll covered period, whichever one you choose, is less than the FTE reference period that you select, which were always the same, February 15th to June 30th, 2019, or January, February of 2020. That comparison, if your FTE during your 56 days, whichever one you choose, is less than your reference period, you will have a reduction. And then the reverse of that is true. If your FTE during your 56 days is greater than your reference period, then you won't have a reduction. So there's 2 pathways essentially for FTE related forgiveness. Pathway 1 is the safe harbor pathway. That's the new addition. So this pathway 1 is safe harbor. So you want to look at June 30th, FTEs need to be greater than the FTEs, greater than or equal to the FTEs that February 15th date falls in, that pay period, which has to be greater than this seemingly random time period of February 15th to April 26th. If all of that is true, you will have no FTE reduction quotient. You will not have to apply a less than 100% to your spent amount after wage reduction. But you know that gets you maximum forgiveness related to FTE. Pathway 2 is the pathway that was always there. Your 56-day time period FTE compared to one of your 2 reference periods, whichever one that you want to choose. So those are the 2 ways that you get to 100% forgiveness based on FTE. The representations and warrants and certifications that you have to make essentially boil down to this. There's a lot more specific language than this, but you know, there is a difference between the level of representations you're making applying forgiveness than you made in actually applying for the loan. Applying for the loan, you basically only had to say, I was in business at, you know, prior to February 15th, and COVID-19 was going to be a problem for me, and I need money. That got you the loan. There's a lot more to getting forgiveness. So essentially, you have to attest that the loan was used for allowable uses in the correct proportions, meaning 75% or more of it was related to payroll costs. I've heard grumblings and rumors that possibly they're going to change that 75-25 requirement, but that hasn't happened yet. You have to attest that all the data that you use in calculating forgiveness is correct, that you have provided all the supporting documentation that's needed to your bank. You have to be truthful in everything that you've done and everything that you've created and produced and used, and that you are agreeing to providing additional information if they ask you for it. Now, there's 2 types of documentation you need to have. Documentation you have to submit with the application, and documentation that you just have to make sure you have in case they ask you for it. So this is what you have to submit. You have to submit the calculation form. You have to submit Schedule A. You have to submit payroll reports or bank statements that show every dollar of payroll cost that was used depending in your 56-day period, whichever one you choose. You have to provide payroll reports or tax reports that show the tax scenario around payroll costs. So your state and local taxes are allowable, your federal taxes are not. That's the employer taxes. All employee taxes are allowable use. So you're using gross payroll amount for employees. You're going to have to turn in and submit receipts, canceled checks, whatever kind of form you have, account statements that show health insurance premiums that were paid and 401k contributions that were made. And you're going to have to show the math and all of the support payroll report, time clocks, whatever kind of hourly based information you have around FTEs. You have to submit for all those pay periods, which pay period you're going to be using for your 56-day comparison period. So they've added this 3rd period in as a possible comparison period. So again, you're going to have to just go through and do the math in each of these periods, February 15th to June 30th of last year, January, February of this year, or any 12-week period between May 1st and September 15th of last year. Sorry, that's a typo. It's 9/15/19. You have to turn in your FTE math around whichever one of those you decide to use and put on your application. You also have to submit proof of your business mortgage interest payments if you have that. So that would include any kind of amortization schedules that exist in that mortgage. along with the proof of payment. If you're renting, you will have to submit a copy of your lease and also proof of payment, and you'll have to submit your actual invoices for utility costs and proof of payment of those things. The things that you have to keep on hand but don't have to turn in unless they ask you for it is the Schedule A worksheets, Table 1 and Table 2, and then all HR related documentation around job offer refusals. This gets into the flexibility and exceptions they're giving you around FTE reductions. So any for-cause terminations, any voluntary resignations or voluntary reductions in work schedule or hours worked, you have to have documentation and preferably signed by the employees that show that those FTEs were reduced and are now being, you can now offset. So if during your 56-day period, if you have FTE reductions due to these reasons, you can, whatever that adds up, let's say that added up to 3.5 FTEs, you can take 3.5 FTEs off of your FTE comparison periods, depending upon which one of the three now that you choose. But you're going to have to show HR related documentation that those, why those hourly or FTE reductions occurred. So that is getting through the entire application, 11 pages in a nutshell. I'll stop there and happy to answer questions.
Right. Rob, thank you very much. That was really intense, to say the least. So there are a number of questions, but I think it would be best if you want to unmute your mic, whoever wants to really ask the question to Rob. So why don't you unmute your mic and ask the question?
Hey, Rob, it's Brian Kelly. How are you?
Hey, Brian, good.
Good, how you been? Just one quick thing I had was how they expanded the utility costs. Do you think one of them would go to, since they're doing all different types of things of like telephones and transportation, would they do things like our billing costs?
No.
Okay. And what about the idea of when if this HERO Act's pass, is a lot of this information going to change?
You mean the bill that's in the House right now?
Yes, sir.
You know, anything can change at any time, right? So they've, just the application itself changed some things. I don't think that it's going to substantially impact this process. The problem is that the front wave of this, the forgiveness applications literally start after next week. So if they're going to change something, they have to do it within a week. Because people will already be in the process of applying for forgiveness. So that's the time frame that they're up against. It's the government. They can do whatever they want, but I would not expect that there would be substantial change. The one thing I know that they are really looking at is whether or not this, you can only have 25% of your allowable use spend go towards non-payroll related costs. I know that's kind of hot on the thing. So I would bet that if there is going to be a substantive change that impacts the math and all of this, it's going to happen within the next week.
Great, gotcha. Appreciate it. It seems like it's changing from like a payroll protection plan to almost like a business protection plan.
Yeah, there's new stuff in the works, new loans. There's even consideration, being given to those that have already received PPP loans to be able to add to their loan amount. Because they realize that in reality, what's going to happen for many, many businesses is starting, let's say, July 1st at the latest, and possibly as soon as the 56-day periods end, now all of a sudden a whole bunch of people are going to get laid off again. A lot of people were either kept or brought back, and as soon as the money's spent, if the revenue, right, if the production is not back, then all it did is kick the can down the road and the layoffs are going to occur. So this is why there's a lot of action going on around next you know, kind of the next stimulus, because they know that's going to happen. And, you know, I believe that, you know, perception has a lot of value, right? I believe, based on independent math, you know, we're at 36 million new unemployment claims that have been made since this whole thing happened. And I read data in Forbes that 37 million new unemployment claims equated to 32% unemployment. We're at 36 million, yet they're still hanging out. They're saying that unemployment's around 15%. So there's a whole disconnect in the actual unemployment rates and the number of unemployment claims that have been filed. And the last thing they want is another 20, 25, 30 million people to file for unemployment because PPP money's ended. It would be really disastrous. So there's a lot that's going to come out in the next few weeks. I'm pretty certain of that.
No, this is so true. You know, actually, from our point of view, yes, we got the money. Yes, we have another few weeks to go through this money, but we really going crazy here to increase the business, because that's the only way out. I mean, what's the point of having 2 affluent months with borrowed money and then go back to that non-viable scenario? So that's why our responsibilities, and I guess that goes to all of you guys and to all of our, at least physical therapists, forget about the rest of the businesses, although we are related, because if next door business doesn't work, you know, these people are not going to have any insurance to come to us. So we're all somehow interconnected. And the second wave that we're going to realize as losses in our profession is that part, you know, employees that they're not working anymore, they're furloughed or fired, and they have no insurances to go and ask for help, you know, treat their backs and knees and shoulders. So that's the next, at least, fear that I foresee, you know, from my point of view. But currently we're going crazy from advertising and reaching out, calling our base to bring them back and make sure that after, let's say, the 56 days go, when we pass the 56 days, to be able to maintain a normal operation and whatever that means, but at least be able to pay our expenses and, of course, move forwards to profits.
Yeah, absolutely, 100% right on. You know, it has always been about top line revenue protection, right? Anything that you can do to produce revenue decreases your need. COVID-19 created a huge gap, right? That's why I like this concept of building a bridge. We've got this gap we have to now bridge. How big and deep that gap is, the biggest driver of all is what reduction in revenue you realize, and the extent you can support revenue, you do yourself so much good. And that's why everything that supports top line revenue is just, you have to be 100%, you know, just doing everything you can to do that. In my line of work, which is helping people get paid, right? So we're a revenue cycle company. I can tell you that there's a lot of false expectation out there around that you should be seeing. You know, let me just tell you what you should not be seeing. When you look at your revenue relative to your production, you should be graphing revenue and production with each other. You should be graphing insurance revenue compared to patient revenue and production. And those lines should be moving in sync with each other. If you see production falling like this and revenue falling like this, and there's separation of lines, there's something wrong. That should not be happening. The only valid, rational explanation for a relative change in revenue related to production is if the nature of the production completely changed, right? So that if you went from in-office visits to 100% e-visits, where you can only get paid a maximum of, you know, $30 or something, then yes, you're going to have a lot less revenue relative to production. But I talked to many practice owners that what they've done is they've added some virtual services, they've added other kinds of services. They're still maintaining a certain percentage of in-office visits, which are all the same, right? And they're still seeing substantial drop-offs in revenue related to production. and that points to revenue cycle related problems. And so you want to make sure that that's not part of what you're experiencing.
Another issue of ours here is that, yes, we are increasing production, but the expense has really moving upwards because, all the cleaning, all the extra gear, all the protective equipment, plus we had, we do now 2 patients per hour, which means all of a sudden production has slowed down because we want to maintain that social distance, right?
Yeah.
And that has created less income. And of course, with an expense that it's not matching that income somehow.
Yeah, so your cost per visit's going up.
Absolutely, yes. That's another. And again, it's hard to deviate from that right now, but we have no choice but to increase the cost of the visit and of course run and try to get that additional production in so we can go to that level after the 56th day to be able to match those 2 items, expense and income.
Yeah, it's the whole game is revenue per visit staying above cost per visit, right? Literally on a per visit basis, and what you do to keep bumping this up at however possible ahead of where this is going, and that's the exercise that everybody has to be actively engaged in.
Yeah. There was a comment here in the chat that one of our participants, most of his employees are 1099, so he just realized that you cannot cover that. The PPP doesn't cover 1099. Is that correct?
It does not, because everyone who's a 1099 had the option to get their own PPP, and so if you were covering someone and that they cut that out because they didn't want duplication. The same person getting funds from 2 different pathways.
Hear you. Awesome. Any other question? Any of you? Just unmute your mic. And
I'm what I've learned is called a true sole proprietor, or true sole prop, which I kind of like the term. But I operate on contracts and off of 1099s. Do you have any advice for the documentation I have to keep to show the drop off in the amount of income that I've lost through loss of business, basically, to be able to try to apply for some of that forgiveness?
Do you already have a PPP loan?
Yes, I do.
Okay. And so your PPP loan amount was not based on independent contractor expenses?
No, it's based on the 2019, net income.
Well, based on 2019 payroll costs, your average monthly payroll costs. That's how they based all the loans.
Yes.
And so, when you're comparing, 1099s have never been in on either side of the equation. But if you're having, so you have income reduction, which is a separate issue. The PPP loan is around supporting spending money on payroll related costs and other allowable uses, which is rent, mortgage payment, interest payment, and utilities. So anything that's outside of the allowable use spend items is not even relevant to PPP. So, your income issue is a separate issue in terms of cash flow. And you have to be looking at and managing that and projecting what's going on. Did you participate with the 2020 cash flow survey that I have?
No, I'm sorry, I did not.
That would be a really good thing. It's a free thing. You go to covidcashflowsurvey.com, fill it out. I'll send you a report. You'll have a really good idea of how your PPP plugs in, how much of your gap does that cover. It's a really detailed report. I'm sure several people on this call have done it. But it's a kind of a separate thing aside from the PPP. The PPP builds part of your bridge, but it's not going to build your whole bridge.
Thank you.
Also, guys, I want to say, Bob, amazing information, really lots of clarifications. we have a hard ending time at 2 p.m. Eastern, because we have to jump on another call, on another webinar. But this is great information. What I would like to let you guys know is, and where all this conversation heading is, that really, yes, let's get the maximum forgiveness, but you have to be able to produce. I am putting right now in the, I'm putting in the chat the registration information for a webinar we are going to do about how to increase your revenue per visit. And we're going to have with us some of the HUD's people who have achieved increase in their per visit reimbursement anywhere from 24.5% to 47%. So you'll hear directly from them the methods and the ways that they managed to increase their reimbursements to this level. So would love to have you guys attend. Join us at this event. It's going to take place on the 11th of June. And it's going to be an awesome event. And of course, we will always be with you every Thursday at 1 p.m. Eastern on this town hall meeting. Bob, we want to thank you once again very much for everything. And if you can make available the deck on a PowerPoint, on a PDF, so we can put it on the savephysicaltherapy.com/resources website, that would be really awesome. So everybody can be able to rewatch the webinar and have in front of them your deck of slides. That would be really awesome.
Yeah, I'll do that, and I'll send it to you today. I saw a couple of typos and just a couple of things in there. I didn't even review it before doing it, so I'll fix those little things and I'll get it off to you.
Bob, thank you very much for everything. And guys, last words, okay? And I keep saying that, Kostas and I keep saying that in every presentation that we give or participate in. For those people who are taking the right steps right now, the best of our days are ahead of us. So you do the right things right now. You stay proactive, and we're gonna do not just fine, we're gonna do better than expected. Let's do the right things though, and be active, be proactive, and really pay attention to things and do the right moves. We need that not only as a businesses, but we need that as an entire profession. We really need to do the right thing right now. So thank you all for your attention and participating in all this.
Thank you
Thank
for
you.
all you're doing as well.